Hello, hello, hi, can you hear me now? Can you hear me? Sorry, the microphone was not working just earlier, but I hope it's working okay now. I can see the bars going on the microphone, so I think it should be working now. Yeah, let me know if you hear my voice. Okay, yes, okay, good. All right. Thank you very much for the confirmation. Okay. Yeah. Looks like my microphone recently has been kind of unstable. So maybe I might have to buy a new microphone, or I have to install a new software or something. But I think I will do it sometime over this weekend. But again, I said say hi to everyone. Thank you very much for joining. And this is Friday on the 17th of February. So happy Friday to everyone. Thanks for coming back. So today, as I put the title, I would like to explain my entry on the USDJPY I took today. So USDJPY was bullish, and it is still bullish in the 4-hour time frame. So I want to explain my thought process from how I screen charts and how I enter trade, and I already exited trade, so how I also explain how I exited my trade too today, so that you also learn from how I took that trade for today's analysis, today's market. Okay, so so now let me switch the screen to trading view. Okay, and here is the USDJPY. So first I was watching the daily time frame was within the Kumo, and I also knew that there was a resistance level on sorry, I think I have too many lines, but the resistance level was 134.78 from the 6th of January. But so that means the market may reverse, right? Or the market may be choppy. Whenever you see the price within the Kumo in higher time frames like this, the market tends to be very choppy in the lower time frames. So we have to be very good at the risk management to take trade in this kind of condition. But for me, I don't mind taking a trade because simply the market was bullish in the lower time frames, and I was following uptrend. So I watched. So that was my first thinking in daily, based on a daily time frame. And then I was also watching the 4-hour. And 4-hour time frame has been bullish. Now it's retracing because Kumo, Senko span B flat, A flat, and Kijun Sen flat just now. But when I took that entry, it was bullish. So I took an entry here today. I will show it exactly how I enter trade based on 5-minute time frame. But I took the trade 2 candles back. On the candlestick of 6 a.m. UTC today, I took that trade. And based on the 4-hour, it has been nicely bullish. The Kumo was bullish when I took the trade. Hold on, let me do bar replay. So when I took the trade, the market was looking like this. So this is the 4-hour time frame. And I was saying that the Kumo itself has been bullish. And this wasn't young Kumo, this was long. And the Kumo itself was getting thicker. So that means Senko span A, the distance between Senko span A and Senko span B were getting wider. So this shows that the market has been stably bullish. So that was the first condition I was watching today, the Kumo thickness and the length. And also, Kijun Sen was pointing up. So Kijun Sen shows the midterm of the market, and Kijun Sen is the baseline, standard line of all the 5 lines of Ichimoku. So I do value this Kijun Sen angle. Whenever I enter trade, I make sure that Kijun Sen angles to take trade. But I was saying that Kijun Sen was pointing up in the 4 hour. And Tenkan Sen. Tenkan Sen is supportive line to Kijun Sen, but Tenkan Sen was also pointing up. And Chikou span was above candles. Chikou span above candles means that this is, stable uptrend too. Buyers are dominant in this market. However, the distance between the price in the Chikou span was a bit too far. So this means that the market is a bit overbought, overshoot. So together with the resistance, daily resistance being close, I was kind of expecting that the market may reverse. But then, because of this bullishness, I took this trade. So that was my thought process. And I have actually the screenshot when I took the trade. So from now, let me show the screenshot to you and explain what I was seeing when I took the trade. So here is the Discord group, and so I took the trade USDJPY buy at 8:30 a.m. UTC. I took an entry on 134.958 with a stop loss of 34 pips. So this is the screenshot when I exactly took that trade. So as I said, 4 hour has been bullish. And I was also watching 1 hour. 1 hour broke the previous doji and Kijun Sen up. And Kumo was up also. And Chikou span also above candles. So I could see buyers dominant in this market. And that's how I confirmed the uptrend. And then I was looking for the exact entry spot, entry edge based on the 5 minute. And after waiting for 10 to 15 minutes, finally I got the entry edge. When I first opened the chart, I was here on this bullish bar. Hold on, let me open this in a bigger picture so that you can exactly see it. Okay, so I think now you can see the more clear picture. So yeah, again, I was seeing the 4 hour bullish and 1 hour also bullish and 5 minute. So I was actually first, when I opened the chart, I was here on this bullish candle, the white bullish candlestick. But then I didn't enter trade. I was actually seeing, I think I saw the gold cross classic, but I waited a few more minutes because I just wanted to see if the market still goes up or not. And so I was waiting for 10 or 15 minutes, and then finally I saw the potential breakout of that resistance on M5. So I just took the trade here. So that was my entry process. So my stop loss was 34 pips down, which was 134.619 was my stop loss. So hold on, let me zoom in my entry. So yeah, so I was seeing this, there was a nice breakout of M5 resistance. This was a bit tricky market because this is called a Y wave in Ichimoku. Y wave means higher highs and lower lows. So this is Y wave. And Y wave is considered to be a bit tricky market because the market may have retraced all the way back down, and then you may see the fake breakout and the market goes up, and then you see the fake breakout and the market goes down. So because of these fake breakouts, Y wave is considered to be not a good setup to be in a trade, whether it's a day time frame or the 4-hour or M5. Any time frames, Y wave is basically the tricky market to be in a trade. So I was seeing the Y wave actually, so I waited for the potential N wave. So you see that there was a new potential N wave here, and this price I think was slightly broken, not really broken, but this was kind of on the resistance. But I was expecting the market breaks the resistance and goes up this way, so I took an entry here. And so again, I was seeing that the 4-hour was bullish. So 4-hour chart, the trend was bullish this way, and also 1-hour trend was also bullish based on KTS, based on Ichimoku, and also my strategy KTS. So I took an entry here on M5. So if 4-hour up and 1-hour is also up, then M5 should be bullish also. But if M5 doesn't go bullish for any reasons, I was planning to exit. So that was my thought process of how I took an entry on the USDJPY. And actually I was also seeing some other pairs trending. I think there are 2 other pairs trending at the same time, but I also checked the strength chart. This is the currency strength chart, and I was watching the strengths to be the best on the USD and the JPY. USD was all the way up, and JPY was all the way down, and the strength was really nice. USD was 58, and JPY was minus 29. So this is also part of the reasons why I picked the USDJPY to trade. So this was my entry timing here. And so whenever I look for the entry edge, entry confirmation on M5, I look for the confirmations. In terms of the confirmations, you can actually, if you're new to my YouTube channel, please come to this web page from the link on the below description and hover over on free download and click on KTS, Kei's trading strategy, and you can access to this web page and you can download the PDF for free that talks about my strategy. And also you can view the series of videos I posted here too. So by watching these videos, I think you can have overall understanding of my strategy. And these videos are only tip of the iceberg, but you can have a look and get overall understanding. So now what I talk is the entry strategy, which is the part 5 of this video series. So I have been looking for an entry timing, and not only I waited for 10 minutes or 15 minutes, I also was looking for the reasons and confirmations to buy the market. So first I found that the market has been moving up, and not only it was moving up, but also you see these two are Bollinger Bands. So I was seeing the Bollinger Bands, the price has been in between the two bands, two lines. So this is one of my confirmations. Yeah, and then also I was seeing that there was a stochastic gold cross. So gold cross was also another entry confirmation. And then I was looking for one more, and I found that there was this is called counter trend line breakout. The counter trend line break. So if you draw the trend line, then it looks like this usually. Looks like this is the typical trend line. But counter trend line goes against that direction and you draw a line like this way to cut through the retracement. So, and because the market may have been retracing like this way, so, but once it breaks the counter trend line this way, then that means this becomes a potential future N wave towards 4-hour and 1-hour directions. So that's what I used here as one of other techniques, was a counter trend line breakout, so that this market potentially becomes a new N wave, bullish this way. N wave means this N wave. So that was my expectation, and that's also the reason I took the trade. So again, I took the price in between the two bands on Bollinger Bands, and then gold cross of stochastic, and also the counter trend line breakout. So like this, I always look for the reasons to enter markets. I don't go into the market, I don't jump into the market by gut feelings or by intuitions. I never do that. I always look for the reasons to enter trade, as always. So that's how I took the entry here, and I put the stop loss at 34 pips down, like this. So that was my initial thought process. So let me just go ahead and continue my talk about the exit timing for this one, and then I will come back to your comments. So in terms of my exits, after that I monitored the chart for a while, and then the market unfortunately went back. So as the market retraced back, we have to look for an exit timing. And I exited exactly on this candlestick, on this blue bearish candlestick. So let me open in the browser again, so that you can see the bigger picture of this exit timing. So okay, so before I talk about the 5 minute, 4 hour was still bullish. 4 hour Kumo was bullish, and Kijun Sen was still bullish. So in the long term, the market may have gone up this way. However, M5 start to retrace. And you know, the markets tend to follow higher time frame direction, but new trend starts from the lower time frames. And this is the potential new trend down. If the market keeps going down this way, or keeps consolidating, then a 4 hour Kumo will be flat, and Kijun Sen will become flat, and the market breaks the Tenkan Sen as Kijun Sen remains flat, and then it retraces back to Kijun Sen, and if it breaks Kijun Sen, then breaks Kumo, and then the whole market turns bearish, becomes downtrend next. But this downtrend starts from the lower time frame. So again, I was looking for the buying edge because 4 hour was bullish and 1 hour was also bullish. But the N wave didn't happen in this case. So because N wave didn't happen, I exited before the price hit the stop loss. Again, stop loss was placed 134.619. And my entry was around here, so I just exited before the price hit the stop loss, way before the price hit the stop loss. So let me just explain more details about this, how I exited, how I decided to exit in this timing. So again, I enter trade here, exactly on this blue bearish bar. I enter trade. And then I exited here 134.787. And the reason was because I actually saw multiple reverse confirmations. I was waiting for the price breaks the resistance on M5, and technically there are some overshoot, hold on, let me zoom in. Technically here, I think there was a slight breakout, but it wasn't clear for me. It wasn't clear. So I was still waiting for the more clear break. And when I was watching the 5-minute candlestick, this big bearish bar candlestick, initially the market went up. So if this candlestick was closing above the resistances like this, and if this candlestick became a bullish bar like this, then I was able to move stop loss to lower the risk per trade, because then N wave was confirmed on M5. However, unfortunately, this bearish candlestick closed below the previous supports and it became bearish bar. So N wave that I was expecting didn't happen clearly. So when I saw this bearish bar, in my mind I was thinking, okay, so the market may retrace, or it may range, or it may go up, but I may have to wait for a bit longer time, maybe 30 minutes, 1 hour, 2 hours, to wait for the resistance break. So that was what I was thinking when I saw this big bearish bar. And then after that, there were some candlestick, and at that time I was also waiting for the break of this support, breakout of the support level here, because if it doesn't break, then this may become a W bottom, and then the market may start to be bullish, because again 4 hour was still bullish and 1 hour was also bullish too. So I was waiting for the potential W bottom and the bullishness in M5 and breakout of the new resistance 135.03 on M5, but it didn't happen. So exactly this blue bearish bar broke the supports, broke the support area or the support zone in this area clearly. So I exited exactly on this candlestick, which was 9:30 a.m. UTC. So again, I took an entry 8:30 UTC and kept holding for 1 hour and closed my trade 9:30 a.m. UTC. So I closed my trade really early, timing like this. I never run losses the whole day or a couple of hours. Whenever I exit, I do exit in a scalping mindset so that my drawdowns will keep small. And this is really important in terms of the risk management. So again, I took an entry here. I took entry on this candlestick because I was seeing the 4 hour up and 1 hour was also bullish, and I was expecting the market to have new N wave this way. But then I was waiting for the breakout of the M5 resistance, but it didn't happen clearly, and then big bearish bar appeared, and then I was waiting for the support level breakout. I mean close below this wick, the candlestick closed below the wick, and finally it happened on this candlestick, and that's how I exited my trade. So this was around 1% drawdown because again my stop loss was here. So this was my SL, and I took entry here. This is my entry candlestick, and so this is around 50% level to stop loss. So to stop loss, I take 2% of my whole account. So I calculate the lot size according to my stop loss pips, and I make it 2% to my stop loss, and then I exit here around 1% drawdown was my trade today. So you may ask, why do you put the stop loss here? Why didn't you put the stop loss here if you exit on the close? And the reason is because if I put the stop loss here, then due to these wicks, the stop loss may be hunted and the market may go up without my positions. So instead of placing the stop loss the most recent low, I prefer to have enough buffer to the stop loss, and so that my stop loss is not going to be hunted, and then I expect the market goes up towards my direction continuously. So that's how I manage my stop loss. But I do put the stop loss because we never know. Today there's no big news, but without big news, sometimes some big candles like this appears suddenly on the market, or maybe bigger sometimes happens, and within the 5 minute or within 1 minute sometimes the market just goes down. So, and it may go down continuously lower and lower this way. So this stop loss is like my seatbelt on the highway, seatbelt. So stop loss 2% drawdown is my worst case scenario. My worst case scenario is 2%. But I always look for exit timing before the price hit the stop loss, which was here, 1%. So that was my thought process from entry and exit. So I think the lesson is that of course, keep the losses small, and that is the most important of my strategy. Yeah, I could have more drawdowns, but sometimes it's a bit too risky because future profits may not cover the previous small losses. So in that case, you just have to take lower risk and take the less drawdowns along the way, and then but keep trading, keep planting the seeds until you see some other some seeds sprouts, and that's my strategy. So in this way, because I exit very early timing, I have many losses. I have much more losses than the wins. My win rate is around 30%. So out of 10 trades, 7 trades are like this. But only 2 or 3 I make profits, and that profits covers these small previous losses is my strategy. So if you want to use my strategy, then I think you have to be very patient. You have to be really patient in terms of the risk management, in terms of spotting the exit timing, and also in terms of which one to select, the best market to trade like this way. So yeah, it's really important like that. Yeah. So again, this was my entry and exit for today's trade, USDJPY. And this was my only trade that I took today, because now looks like the markets are retracing. So I have no trades so far. But yeah, I think the markets are continuously a bit choppy. So we just have to look for opportunities. And whenever the opportunities comes, you just take the trade, and once it's gone, you just have to exit. But that's at least my thought process. So yeah, again, this was when I took my entry, and this was the strength chart I took when I took an entry, and then this was my exit timing. Okay, so yeah, now let me come back to some comments. So thank you very much for joining, very good. Yeah, great to see you again. Thank you very much. Okay. Yeah, looks like USD has been really strong today. So, yeah, Bitcoin's going down. Gold is also going down. I was also looking for the trade chance in gold, but couldn't find the entry edge. Oh, I can see some comments, and looks like some people are trading the USDJPY also. Okay, yeah. So after that, the market retraced, but make sure your drawdowns keep small, and you should be fine. Okay, today I took the stop loss, took the USDJPY with a 30 pips stop loss and exited with 19 pips of loss. Okay. Okay, yeah, 30 pips stop loss and 19 pips of loss. So it was around 2/3 to the stop loss, right? So it's okay. As long as you look for exit timing before the price hit the stop loss, it's okay. And you should be able to find the exit timing before it hits the stop loss. Alright, yes, thank you so much for joining everyone. Great to see you. And happy Friday, everyone. Good to see you. Okay, counter trend line can be as low as 2 candles. Yeah, so this was my counter trend line. And 2 candles retrace, and I was seeing the potential end wave. So that was my counter trend line. Yes. Okay, Brandon says, what session in the market do you trade, and which sessions would you advise to avoid? I trade on all the sessions, whether it's Asian session, London session, or New York session. I trade all the sessions. Whenever I see opportunities, I simply take. But in general, the Asian session markets are quiet in range, so I have less opportunity during the Asian session on the markets. Some JPY pairs or AUD pairs are trending, but whenever they do, I look for opportunity, but whenever I don't, I stay away. So that rule remains same on any sessions in the markets. Okay. Yeah, as long as you can exit with a small profit, that's fine. Yes. Yeah, I think one of my biggest mistakes in the past was that I kept the losses too big. So some days I was winning 100 pips, but other days I was losing also 100 pips. And psychologically, it was really difficult, I remember. So now I exited with maybe, in this case, maybe like a 17, 18 pips of loss was really small for me. And now I calculate the lot size. I calculate the 2% to stop loss. So it's really safe in that way to take trades. Yep. Okay, John says, when you confirm your position on the 4 hour, do you hold the trade until the 4 hour goes flat? Yes, I do. Yes. So originally in this case, I took the 4 hour trend. Not the daily, but I took the 4 hour. So again, daily is now looking like this. Daily chart, the price is exactly in the Kumo, and the market is near the previous resistance. So daily chart we can't follow. I mean, there's no trend and there's nothing to follow on the daily chart. But then I look at the 4 hour, and 4 hour is bullish based on KTS. 4 hour Kumo is looking bullish, and Kijun Sen is up, Tenkan Sen is also up, and the Chikou span above candles. So that's how I look for the market to trade, and That's how I select the pair to trade and go down to 5 minutes and look for an entry timing. And when the 4 hours start to reverse, most likely Kumo goes flat and 4 hour goes flat. And that's when I look for an exit timing. Yeah, so that's my strategy. So I think my strategy is really conservative. In terms of the drawdowns, it's really conservative, and I don't care about the win rate because I was before looking for high win rate strategies, but then I figured that it was a bit too stressful for me, so I decided not to do it anymore, and I started to value the risk and the reward ratio more than the win rate. And things start to work more. So that's my strategy. Okay, let me check some other comments. Mario says, "Hi Kei, how do you keep your discipline to always keep your losses small? Sometimes I lose my discipline and I don't cut my losses quickly enough." Okay, so that's about psychology, I think. That's about psychology and following your own rules with discipline. Yeah, so you have your own system, I have my own system, and if the strategy says yes, then we have to do it, no matter what you think about the markets. And if the strategy says no, then you have to do nothing, or you have to quit trading, you have to cut the loss, you have to exit, no matter what you think about the markets. So strategies are important in order for us to keep discipline, but as soon as you become subjective to the markets and violates the rules, then that's, I think, when you start to make losses big. So yeah, so that's one of the things I think about the losses, to keep it small. And also I like to keep the losses small because the markets are basically uncontrollable. So if it's uncontrollable, then we have to keep the losses small. And I think also this is about the psychology management, is that this is about the win rate versus risk reward ratio, which one you value more. If you have the big stop loss, let's say 100 pips of stop loss, then you have a buffer of 100 pips to keep winning losses, but the market may retrace 70 pips, 80 pips, but then after that it may start to go up towards your direction, and tomorrow or sometime this week or next week you may start to run profits. So if you hear this story, then you may think that wide stop loss sounds good because you have enough buffer and the market may not hit the stop loss. But the other side is that 100 pips is really wide in Forex, and we never know how many days, how many hours, how many weeks it takes for the market to go down 100 pips. And if it reverses within a day, I think it's okay, but it may take 2 days, 3 days. So as it goes down gradually, 10 pips, 20 pips, 30 pips down, your psychology may be a bit stressful because you're in a loss. You see the red number in your profile, and it might affect your psychology. You might get emotional, or you don't feel good about running losses. At least for me, it was my case. And also, wide stop loss, 100 pips, let's say stop loss, means if you want to take 2% risk or even 3%, 4% risk to 100 pips of stop loss, you have to decrease the lot size. So if you have 20 pips of stop loss and 100 pips of stop loss, the lot size is 5 times different. So that means if the market goes up towards your direction after you enter trade, which one you make profits more is of course when you have the smaller stop loss, because your lot size is bigger, and once you start to make profits, it becomes really fast, and you make profits more time efficiently in that way. And this is the second reason why I don't put the big stop loss to trade. So yeah, so I was also before, but when I first started my Forex journey, I never knew about the stop loss before. I was like, what stop loss? And I read some books, and I was watching some website, and I know, okay, stop loss is where the market will be stopped out, where my position will be stopped out, and I will be out with the loss on that level. Okay, I know. So let's say I have the stop loss, and I just take a trade, put the stop loss, put the TP, and I sleep over. Next day, the market hits the stop loss and lose. And when this thing happens, sometimes my drawdowns were really big, becoming really big, and so I thought having stop losses, I thought it's really bad idea, I thought. And then I got big losses, I blow account, and I started to realize the importance of the risk management, and then I restudied about the stop loss, and I started to use stop loss as of now. So, and the way I use stop loss is a bit, I think, different from what people usually say, because again, I usually have the small stop loss. In this trade again, I took the 34 pips of stop loss, which is okay. This is a bit wide, but it's okay, acceptable stop loss pips. So this is my strategy, is that in terms of the trend follow, I take the 4 hour to follow. So, and in terms of entry and exit, I take M5, 5-minute time frame. So this is multiple time frame concept. Right, so if you look at M5 entry timing, then you may think that I take trades, I'm actually taking trade on M5, and yes, that's correct, but hold on, let me share screen again. So yeah, I follow the 4 hour time frame, which is higher time frame, and I take entries on M5. And the reason is because I follow the 4 hours. So basically, I'm trading the 4 hour time frame. I am not following 1 hour, and I am not following M5 direction, but I'm following the 4 hour direction in my mind. And that's why I say, as long as 4 hours bullish, I keep following, and when 4 hour goes flat, that's when I exit my trade. That's why I say that. But in terms of the entries and exits, I use M5 to capture exact spot for entries and also exit with the loss or with the profit. So I kind of mix the day trading or swing trading strategy to trend follow, and scalping strategy for my entries and exits. And because I found that this is the best for me to manage the risk and the reward ratio, and also to be disciplined on myself. And that's how I created my strategy. Yeah, so I think the markets are again random, and we can't control the markets. Sometimes we say it's a Mr. Market. Mr. Market is really unpredictable and aggressive. Sometimes he cries today, he's mad today, But tomorrow he's happy, he's smiling, and the next day he's sad again, he's mad again, he's angry, or he's sad. So he has big ups and downs in emotion. So sometimes we say Mr. Market, which is uncontrollable. And when it's uncontrollable, then when he's down, when he's crying, when he's angry, we just have to stay away. Don't do anything about him. Just stay away from him until he gets happy again, until it starts to trend again. So that's how I identify the trends by Ichimoku in higher time frames. And once I confirm he's happy based on high time frames, then I look for entry chance. However, there are times that the market reverses afterwards, like this. In that case, I simply look for exit timing. So, and then my trades just goes on, like that way. Yeah. Alright, let me see some comments also. HHS says, the reality is nobody wants to watch a professional trader because they talked too much with less views. Everyone likes to watch showing 4-5 figure profile. Okay, you are the best. Oh, you're welcome. Thank you very much for the comment. Yeah, I only share what I see and what I feel, what I think about the markets. And if it's something for you to learn, that will be my pleasure. At least for me, the strategy has been working, and this year is actually the 10th year of my trading career as a full-time. Time flies, already 10 years. But for the last 10 years, I have learned a lot. I learned a lot and I have failed. I made lots of mistakes. So hopefully by watching my live streams or videos, you don't make the mistakes I made, so that you don't waste your time in your trading process is my wish to everyone. Okay. Freddy says, in this trade you already get lost. Did you take revenge immediately to get cover this loss? No, I don't. I never trade the revenge trade. I never do that. Because this is also my mindset, is that, okay, I saw 4-hour bullish, 1-hour bullish, and took entry on M5, right? So I was expecting the market goes up on N wave on M5. But at the same time, I know sometimes it doesn't happen. In this case, it didn't happen, and the market started to go back on the reverse in the wave. And when I see the reverse in the wave, I don't revenge trade, I don't sell, I don't buy, because we never know which way it's going. M5 is going down, but 4-hour, 1-hour are still bullish. At least 4-hour was still bullish, so the market may go up from here. But I don't buy because M5 is going down. So this is where the fight between the M5 sellers and 4-hour buyers happening. And usually market spikes very much. Especially this pair was still on the daily Kumo. So I know the market spikes and I don't revenge trade in this case. So that's my thought process. Okay, Jonathan says, thank you, Kei, to show your real trades, your real results, and how you manage the trades. It's important to see it to be able to understand all the process. Oh, you're welcome, sure. If you understand my thought process, that will be my wish. Yes, my pleasure. Yeah, I value risk and the reward ratio more than the win rate. Because win rate can be lower than 20. Because after all, the market is 50-50 chance. If you buy now, the probability for this to go up or go down will be 50-50. No matter how many confirmations you can get, it's 50-50 after all, because there are always exceptions. So if it's 50-50, then the probability, the win rate should not be below 20. So if it's not below 20, then if you have the risk-reward ratio of 1-3 or 1-4 even overall, then you still make profits with 20% of win rate. And after I figure this out, I don't start not to care about the win rate anymore, because I'm not a scalper. I take trade, and I want to take trade in a swing trade. Okay, Michael says, as observed your archive videos, I have learned that the trends from big and small time frames 45 minutes should be trending. Using KTS is always winning strategy. Okay, you're welcome. Yeah. I always follow the big trends. I don't follow the small trends. I always follow the big trends and capture exact entry and exit timings on M5. Yes, okay. Yes, I do. I do trade gold, yes. I just simply cannot find the entry timings yet. But I'm watching gold's going down in the 4 hour, so I'm looking for the entry timing to sell gold now. I was watching to buy gold before, but now you see 4 hour retracing. So here is the 4 hour time frame. And you see it has been going down. Now Kijun Sen flat, Kumo flat, so the market may retrace back to Tenkan Sen, or it may break Tenkan Sen last time, like last time. It may break Tenkan Sen and goes down. So this is not the best timing to sell now, but I'm still waiting for the great chance to sell gold, to follow the 4 hour downtrend in this way. Okay. All the head says, partials have really changed the game for me. K, do you ever partial or move your stop loss to break even? Yeah, I move the stop losses to break even. And I don't take trades partially, but what I do is I take 2 positions. When I took the buy on this USDJPY, I actually placed 2 positions and 2 stop losses. And if the market goes up along the way and retrace, I take one of the positions and I have second position still. You see, so I have 2 positions and I manage 2 stop losses along the way up if it goes my direction. So technically I don't take trades partially, but that's how I manage my profits. Okay. Yeah, I already mentioned about confirmations, so you can watch the archive after this live ends. Okay, so I do see some more comments, but unfortunately I have to go now. I have some meetings, so I have to go. But yeah, thank you very much for joining today on the live stream, and happy Friday to everyone. So the market's closing, so no rush. If you can find any trading edges right now, then don't rush. Just stay away and come back on Monday, because markets are open every day with or without you. So, and there's always a next chance in the markets. So again, thank you very much for joining. And I hope you have a great weekend ahead, and hope to see you again soon. So until I see you next time, please stay healthy, stay safe, stay gold. Bye for now, everyone. またね. Thank you very much.